What's up, YouTube? Welcome to Automotive Life. My name is Lucky, and today's video is all about credit. Now, we're going to talk about why credit is so important, whether you're either buying a car or if you're getting in the automotive industry, opening up a rental car company, car dealership, auto repair, body shop, or even if you want to flip cars. Credit plays a crucial part in all of these businesses, and I didn't know this when I first started, so I want to make sure I share this with you guys so you can start building up your credit and doing things now. Now, I've told you I've owned multiple businesses in the past, but one of the things I didn't tell you guys is I used to own a credit repair business. So I'm going to give you some of the tips and tricks that I use to actually speed up credit repair and also build credit, so this way we can get you rolling. So if you guys can do me a huge favor and gently squeeze the like button, it helps me with the YouTube algorithm find more amazing people like yourselves that enjoy automotive content. Also, if you consider subscribing, we post really great stuff like this all the time. Not only cars and stuff, but the things on business to help you grow your business. It's very, very important. And click the notification bell because we are posting 3 times a week. And also, you can follow us on Instagram at automotive.life. We are way more popular on there. We post funny videos, tips, tricks, everything every single day. So make sure you look for that. And without any more shameless plugging, let's get into the video. So the reason why we're picking credit as a topic today is it's very crucial for your business success and your growth. You know, as I was reading all your comments down below, there's one reoccurring theme. How much does it cost to start a rental car company? How much does it cost to start a dealership? How much does it cost to start an auto repair shop? All these things, you know, they're all kind of the same. They all cost a certain amount of money, but the goal is we don't want to use your liquid capital to start your business. We want to use your personal or your business credit. You keep the liquid capital for your bills, your overhead, and anything you cannot pay with basically credit. You know, when I first started in 2000, I didn't focus on my business credit or my personal credit. So it costed me a lot of money, a lot of headaches, a lot of growing pains because a lot of you guys are getting really successful really quick. And this is why we need to structure you guys correctly when it comes to this. Now, like I said, on this channel, we teach you guys everything automotive wise, but credit is a huge part of this. And I'm going to go into each of these little businesses and explain why credit plays a crucial role in each one of these things, and also give you some tips and tricks along the way. So this way we can go into it. Now, first thing we're going to talk about is personal credit and business credit. Let's go ahead and start with personal. Personal credit is huge when it comes to actually getting your lines of credit for all your different vendors. So as of right now, you need to figure out a way where you can either clear up your personal credit or get it as high as you possibly can. The reason is, you know, every vendor we're going to be dealing with, let's say rental car company. If you open up a rental car company tomorrow, first thing they're going to do is, okay, we need to run your credit for your insurance. We're going to need to run the credit for the bond. We're going to need to run your credit for your actual purchasing of cars, your lines of credit. So those 3 things right there are all going to require you to have good personal credit. If you don't, let's take your insurance for instance. If you have bad credit, your insurance premium could be required to be paid up in full for the whole year. That could be $10,000, $15,000, $20,000. That's a lot of money. You know, if you have good credit, you may only have to put maybe $500 down to start your policy or $1,000 down, and you can, you know, lower your overhead. Second thing, your bond. You know, rental car companies are not too bad, but if your bond is, let's say, $5,000, $10,000 and you have bad credit, they may not even issue you a bond. They may require you to put $10,000 up of your own money into a bond, and it just has to sit there. So now you tie up another $10,000 of your money, you know. And then when it comes to buying cars, you know, I see all these people going out buying 17 cars at one time on their personal credit. Don't ever do that. It screws up your personal credit, and I'm going to explain the reasons why we don't want to do a lot of these things. Now, you know, as we talk about personal credit, this is all going to funnel into the business credit aspect end. So, you know, we just talked about how, you know, you need these things for your actual rental car company. Let's go ahead and jump into the dealership end. You know, dealerships, exact same thing. If your insurance, and insurance is huge, if you have bad credit, nobody's going to do business with you. So you're going to have to pay a bigger down payment, or you have to pay your dealership insurance up front, and it's very, very expensive. So we don't want to do that. Same thing, your bond for most dealerships in every state is about $100,000. So I've had people with bad credit that we've signed up and got online, and they were paying anywhere from $10,000 to $15,000 a year to actually get their bond. Now, it's cheaper for you to fix your credit than to spend something like this. And the worst thing is I see people do this and they don't fix their credit, and it continues. So make sure, like I said, credit is important. Next thing we're going to talk about is your actual, same thing, lines of credit. None of these banks will, none of these vendors will actually give you a line of credit if you have bad credit. I mean, it's pretty explanatory, but here's the big kicker. And this is going to freak out a lot of people that are in the dealership realm. Most banks that we sell deals to, that we do financing through, will not do business with you if you have bad credit. So let's say you get signed up and you have Wells Fargo that wants to come sign you up because they like your inventory. And you're like, oh my God, just this bank alone, I'm going to sell an extra 30, 40 cars a month. And they come in and they run your credit and they're like, oh geez, you're like a 510 credit score. We don't want to do business with you. So now you just lost that opportunity to change your life, to sell an extra 10, 15, 20 cars a month because your credit was all out of whack. And there's a lot of other things like Cuddle. Cuddle is credit union direct lending. That is another thing where they actually run your personal credit to see if you actually are credit worthy. And if you have bad credit, they don't even sign you up on the program. So now you lose all those credit unions that you could have done business with. The next thing is called a title float. What a title float is let's say I sell you 3 cars in 1 week. Let's say the bank is Westlake Financial. I sell 3 of these cars to Westlake. My title float is 3. So after the first week, I sell 3 cars, and I sell another 3 cars the next week. I will not get paid for the next 3 cars until they receive the 3 titles from the cars before. And it hugely screws up your business. I've had deals where I've actually had like 15 cars in 1 week go to one bank, and it tied up my title float. So they only paid me for half of them. I couldn't go out and buy new cars. I couldn't pay off my lines of credit. And everybody knows flooring lines and lines of credit. They're blowing your phone up. When are you getting funded? When are you getting funded? All this stuff plays a part when it comes to your personal credit. And it's very important that you need to build this because, like I said, every little speed bump you're going to go to is going to hit this. Next, we're going to go into auto repair. And I know what you're thinking, well, I've been doing auto repair for years. I don't need this, blah, 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 blah. Wrong. Same thing. Insurance, going to run your credit. Bond. You got to get a bond and you got to get certified by the DMV. If you don't do that, you can't lien vehicles. If you don't do that, leaning vehicles is a huge part of your business. You want to make sure you protect yourself from people just leaving cars and turning your auto repair shop into a junkyard. So make sure you get the actual process and get licensed by the DMV so you can lien vehicles. Second is your vendors. When I first started, I turned down a lot of business because in the classes that we teach, we actually teach you guys how to go after big corporate accounts. And some of these corporate accounts are net 30 and net 60. What that means is, let's say they give you $100,000 worth of cars to fix, you fix them and you build them, you may not get paid for 30 to 60 days. I mean, if you're rich, you just have a bunch of money sitting in the bank and you could float that, that's fine. But you need to have lines of credit so you can build this. Now, automotive is probably automotive repair is probably the only one that actually lets you build your in-house credit with the actual vendor. But at the same point, you'll never get a net 30. It'll be week to week, and if you mess that up once, you're pretty much done. So if you want to go after these bigger accounts and you want to go after more fleet accounts, you're going to need that actual personal credit. And the next thing after that is your tools and your equipment. There's nothing worse than, you're growing, you have multiple fleet accounts, you got 2 new mechanics, you're ready to rock and roll, you're making money, but you don't have the lifts to get them done. Or maybe if you had an alignment rack, you can get some extra stuff. Or if you want to just get some extra tools and equipment for scanners, stuff like that, you don't want to rely on the Snap-on and Mac guy. They're going to charge you all kinds of interest. They're going to hound you every week for a payment. And then on top of that, that credit is non-transferable. It's only good on their truck. So if that guy retires tomorrow and you try to get more tools from maybe the new Snap-on guy, you're pretty much SOL. So, same thing with auto body. Credit plays a huge part. Same thing with all your vendors, your insurance, your bond, everything else. Now, the last one we're going to go into is car flipping. After car flipping, we're going to go over the difference between personal and business credit, and then I'm going to give you some of the tips and tricks I use to actually build my credit up and what we use for some of our students and people we know. So when it comes to flipping cars, yes, you can use credit to do this. Now, when I first started my automotive journey back in 2000, I was fixing cars during the day with my shop, but then during the wintertime it was slow, so I would actually go bartend at night. I did this for about 2 years and I just got sick of it. So I went out and got a personal loan and I borrowed about, I think it was $20,000 from Wells Fargo, because back then Wells Fargo would give you a $20,000 personal loan. Now I feel like Wells Fargo won't even give you $1 unless you have $1 million in the bank. So, but I got a personal loan. I went out and bought a bunch of cheap cars, $500, $800 cars, kind of what I'm doing right now. Fixed them all up. through, basically November, December, and January, and then I sold them all during tax season and turned the 20 grand into 60, which was great. And so that kind of became my thing when it came to flipping cars. But I was never able to do that unless I had good personal credit. So you can do the exact same thing. If you're, have a shop in your backyard and you're wanting to flip some more cars and take it to the next level, you can do the exact same thing. Also, if you get your mobile mechanic license, you can start getting lines of credit with all these vendors. And once you decide to open up a dealership, a shop, or whatever, you can actually transfer that because it's under the same LLC and you're the personal guarantor. It'll transfer to any single one of those. Now, we're going to go ahead and talk about business credit and personal credit and the differences between both of them. Now, you guys have heard me say this before. If you go out and buy cars for like your rental car company and stuff like that, you don't buy on your personal name. You only buy maybe one or two, but then eventually we want to transfer them over to your corporate credit. The reason is everything you put on your personal credit goes against you. Your DTI, your payment score. And I see a lot of these guys that are doing these, turo and rental car courses are teaching people how to get like 7, 10, 15 cars on their personal credit in one shot. And you never do that. You want to have good personal credit so you can co-sign for your business, which will help build your business credit. Now, when it comes to business credit, there are a lot of pros and there are some cons. And we're going to go over a few of those right now. Now, when you have good personal credit, you get great rates. They pretty much bend over backwards. You get whatever you want. But when it comes to business, even if you have the most amazing personal credit, the rates are what they are for business. So the easiest way I can explain it is if you're buying a house, you qualify for 30-year mortgage at the lowest interest rate. But if you go out and you buy, let's say, a commercial building, you do get like a 15 to 20-year loan, but your interest is higher, your down payment is higher, and your interest is higher. So you don't get all the benefits of a personal loan because they know that you're making money with this industry, so you should be able to pay higher interest and a bigger payment. And it forces the business to pay down their debt, which is huge. That's the way business is structured. Everybody thinks, oh, I'm not gonna get a corporate line of credit just so I can have higher car monthly payments. I'm gonna get it my personal name so I have low payments. You're a fool. That's what it's for. It's to outrun debt, to outrun depreciation. Everything we're going to talk about kind of coincides with that. So let's say you get an auto loan. I guarantee if we go to, let's say, Ford, and you get a brand new F-150, they're going to give you 72 to 84 months. On the corporate end, some of them will give you 72 months, but most will be anywhere from 60 to 65. And they'll give you even better, lower interest if you go shorter term, like 50 and 40 and 36 months. There are some businesses, that's how we do it. My first tow truck, I think it was like a 45-month actual loan. But when you sign up with your business credit and you co-sign for your business, that tow truck now, or the rental car that you bought, stays on your business credit. It doesn't affect your personal. And that's the best thing about business credit. So if you get a business credit card for $100,000 and you literally go out and spend $90,000 tomorrow, your personal credit will not suffer. You won't go down a single point because it's only the business. So like I said, you do have to pay higher interest. You do have to pay shorter terms. But like I said, it doesn't affect your personal credit. And that's why, like when it comes to the dealership and rental cars, don't buy any cars unless it's on your corporate credit, because some of these people, I'm actually going to interview one later this week that bought the 17 cars on their personal credit. She can't buy a house. She can't buy any more cars. One of her credit cards actually cut her off because they thought that she was just maxing everything out and getting ready to leave the country. She screwed up her personal credit for years. The only way she can get out of it is if she actually gets a loan to take everything off. So we're working with a few of our vendors right now to see if they'll actually give her a loan to take these things off her personal credit so she can get her personal credit back to normal, where she can be able to buy a house and some other things. Now, she's gonna have to put about $20,000, $30,000 down to get out of all these cars, but hey, it's the nature of the business. So instead of doing this way, that's why I wanted to make this video about why credit is so important. So, to build your personal credit, there's a bunch of stuff you can do. But one of the things I'm going to tell you is your credit is your investment. I have a friend of mine, his name's Will Roundtree. If you've seen him on my channel and on Instagram, he specializes in helping people with their financial business and fixing their credit. And one of the things that he does, he has some of these credit packages that he fixes are almost $10,000, $20,000, $30,000. And people are like, well, why would somebody pay $10,000, $20,000, $30,000 for their credit? It's because people that actually use it for a business know how valuable credit is. You need to treat credit like an investment. Every dollar you put into your credit, the more dividends it's going to pay back. And what I mean by that is, if you get 500 bucks and your credit card, let's say you could use 300 of that on your credit card, do it. Every time you get $500, take $200 of that, pay down your debt, keep the 300 bucks in your bank, and just get in the habit of doing that. And I promise you, like I said, you will see dividends and you'll start doing that. If you have, $3,000-$4,000 and you're trying to put $3,000-$4,000 down on a car that's going to get you a high interest, high payments, why? Wait a month or two. Pay a company to dispute all the bad stuff on your credit. Make some deals with some of your vendors. And then also, there's a lot of companies out there that sell trade lines. One of the things that a lot of people don't realize is the more trade lines you have on the credit, it's not a bad thing. It shows more available credit, which shows more liquidity, which raises your points even more. So instead of taking that $3,000 to go buy a car that's going to give you really high interest rates, take a month or two, step back, get $500 of each of the, or break that $3,000 into $500. Go to Wells Fargo, Bank of America, US Bank, Discover, American Express, a few local credit unions, and get secured credit cards. Give them 500 bucks. They're going to give you a credit card in return, and then you start using it. You don't use it a lot. I know it sucks because you're going to tie up that $3,000 in credit that you use and you're still paying interest on it, but you got to start somewhere. And if you get a bunch of cards at once, your score is going to jump up dramatically, because a lot of these people, well, I got one secured credit card and I got one, small thing. No. Go out and get like 5, 6, 7, get as many as you can, as many secured credit cards as you possibly can. The next one is a CD loan. If you go to any of these banks, I recommend going to like a small credit union because they're more available to work with you. They have loans where, like, if you give them 1,500 bucks, they'll get a CD and they'll give you a loan against your CD as collateral. So every month you go and you pay 50 bucks, and it's called an installment loan. So your credit cards are what's called revolving, and then the other loan is installment loan. So if you get 2 of those on your credit profile, it speeds up very quickly. And you could do this with multiple banks. You can go Bank of America, US Bank, Wells Fargo, all your local credit unions, Chase, PNC, whoever you have in your area. Navy Fed has a really, really good one. I only use Navy Fed for all my stuff because they are very willing to deal with people. They pull from TransUnion, which is good, so most people's TransUnion is higher. So this way you'll be available to get hopefully a credit card, or actually get a starter loan or credit builder loan. Now that you have those things, there's other ways you can buy them. There's companies out there that sell lines of credit. Now, I'm going to say a few companies, and I'm sure people are going to be triggered and be like, they suck, but hey, you know what? I used them. What was it? New Coast Financial. You can get a $5,000 line of credit with them for like $400 or $500. They charge you for it. You can't really get anything because all their crap is junk on there, but you're paying for the credit line. Next one is My Jewelers Club. Now, a lot of people hate that thing, but I'll tell you what, hey, I got a $5,000 line with that one, with my credit cards. It jumped my score up dramatically. I still set some of my students up with it today, but it takes a little bit of time. Be patient, but like I said, you got to invest in your personal credit. Next thing is getting your friends and family to get you as an authorized user. So let's say your mom or your dad or your brother or your sister have a MasterCard. It's a $5,000 limit, but he's had it for 10 years. The second he adds you on there, you get 10 years of history on your credit report, and your score dramatically jumps up. So when we have people sometimes in the dealership, we actually will finance them like, hey, I'll tell you what, call your family, add them onto a credit card, do something like that. We're going to hold the loan for 30 days. We're going to run your credit in 30 days and see what happens. And a lot of times these things will add up on people's scores and jump them up. So people do it before they buy mortgages. They get 2-3 cards added onto their profile and they shoot up. Now, Authorized Users is a really cool thing because you could jump up like instantaneously and you can go up there. You can actually request not to give a card to that person. You just want to add them as an authorized user. So if you're worried about adding a family member and then messing up your credit, you don't have to worry about it. Just tell them they're not allowed to have their own card. So once you get that established, you can go ahead and go for that and start adding more and more cards. If you can add 3, 4 at one time, your score will just jump up. I've seen people from 0 go to 780 with 3 authorized users, and it happens really quickly. Now, here's a downfall with authorized users. If that person adds you and they're maxed out their credit card or they have a late payment, it goes against your credit as well. So it is a double-edged sword. You get all the benefits, but do you get all the problems if they don't pay their credit cards on time? So if you do this, make sure you have a very clear knowledge of how it works, and tell them, look, I don't need the credit card. I just need you to add me for 3 to 6 months. After that, take me off. And most people will, because and also when I was younger, I paid for it. I was giving people $400 or $500. Hey, add me onto your card for 3-4 months and then take me off. And so they would add me on for 3-4 months and take me off. And then I'd get the history. My score would jump like 5, 10 points, 20 points, 50 points. And it just kept adding up and up. And so until you get your own established credit cards. And also, if you want to do something for long term, like you have American Express or something like that, have them keep you on there for a little while and then apply for your own. So this way, hopefully they see that the person that you have the American Express with is paying, and they'll extend some credit to you as well. Last thing I want to talk about is some of the business credit that you can get. Now in the automotive industry, there's lots of loans, lots of lines of credit, and lots of equipment loans and structured loans that you can get for your business. But there's a big myth out there that, oh, you don't have to do any type of PG, which is personal guarantor, on any type of lines of credit if your business credit is built up. I'm here to tell you they are 100% full of shit. There is not a single bank in this world that will give you a line of credit or a business loan without some sort of personal guarantor or assets on the line. So everyone's like, oh, well, I got $1 million line of credit and I didn't have to personally guarantor it. Guarantee you it's tied up to either their business assets, their business account, or their actual a CD or something. They have some sort of guarantee where if this person runs, they'll disappear. Because back in the day, I call this the Donald Trump status. They would start 2 buildings. Let's say you have 2 restaurants. This restaurant spent tons of money, got fancy equipment, fancy stuff, spent a bunch of money in marketing, and they built it up really high. And then they had this other one that was a very small restaurant, was bare bones, but it was built to make money and save money. So this one would save, and this one would grow. And make a long story short, this one right here would file bankruptcy. So they'd file bankruptcy, and then this business right here would come and buy this one for pennies on the dollar and start over again. And now they have no debt, and this business owns this one outright. So now this one's making all the money with pretty much no debt. They would do this stuff. They would literally get an LLC, get a bunch of money, file bankruptcy, open up another LLC, get a bunch of money, file bankruptcy. Those days are gone. The banks are hip to it. Nobody cares about that stuff anymore. If anybody tells you they can get you a loan without a personal guarantor, I am truly shocked. Now, there may be some small little tiny mom and pop banks that do that. But unless, like I said, you have some sort of business relationship, or they want to tie up your collateral, or they want a personal guarantor, it is almost impossible. So if you hear me talking about corporate lines of credit, it's because you have to personally guarantee it. So you need to have good personal credit. You could show $1 million in the bank, they don't care. We had a guy in Houston, I did a video about him a few months ago. Same thing, millions of dollars in the bank account, and they didn't care. They wouldn't give him any types of lines of credit. It was embarrassing. So credit is king. Cash used to be king, but now credit is. We want to utilize your credit to build up your business and help you grow. So if you've learned anything, like I said, gently squeeze the like button. I truly appreciate it. Also, if you consider subscribing, we're posting all kinds of stuff, automotive content, and now some business content, which is kind of fun. Also follow us on Instagram at automotive.life, and we'll see you in the next video.